Welcome back, everyone. Today we're taking a deep dive into a topic that's been generating a lot of buzz lately: generative AI in finance.
It's definitely a hot topic for sure.
We've got a whole stack of sources to help us unpack it
Oh,
all.
excellent.
A book aptly titled Generative AI in Finance, some cutting-edge research articles, and even some real-world case studies to see how this tech is already making waves.
Looking forward to it.
Our mission today is threefold. We want to give you a clear understanding of what generative AI is all about, explore its potential applications in finance, and of course dive into the ethical and regulatory considerations that come along with it.
Sounds like a plan. Let's get started. I suppose it makes sense to begin by defining what precisely we mean when we say generative AI.
Mhm.
Essentially, it's a type of artificial intelligence capable of creating new content, not just analyzing existing data.
So we're talking about AI that can write text, compose music, generate images, even code, right?
Exactly. It learns patterns from vast amounts of data and then uses that knowledge to generate something entirely new.
It's like teaching a computer to paint a masterpiece based on its understanding of thousands of other paintings.
That's a great analogy. Now imagine applying that to finance.
It's not hard to imagine the possibilities, but what are some specific ways this tech is being used in the financial world right now?
Well, one area we see popping up again and again in our sources is automation. Think about all those repetitive, time-consuming tasks that financial professionals have to deal with on a daily basis.
Data entry, for example. It's essential, but incredibly tedious.
Generative AI can handle tasks like that with incredible speed and accuracy, freeing up human workers to focus on more strategic, higher-level work.
So it's like having a super efficient digital assistant who never takes breaks or complains about the workload.
Exactly. And it goes beyond just data entry. Generative AI is transforming fraud detection. Picture this: an AI system that creates synthetic data, mimicking real financial transactions to train fraud detection systems.
So it's like giving those systems a workout on a virtual obstacle course of potential fraud scenarios.
Precisely. This allows those systems to learn, adapt, and become more accurate at spotting real fraud in real time.
It's almost as if we're getting these systems a crystal ball to predict future fraud attempts. That's pretty powerful stuff.
And speaking of predictions, generative AI is making a big splash in financial forecasting as well. It can analyze massive amounts of data, identify trends and patterns, and provide insights into potential market movements.
So we're talking about a tool that can help investors make smarter decisions based on a deeper understanding of market forces.
That's the idea. It's about moving beyond simple historical analysis and using AI to get a clearer picture of what the future might hold. And it's not just about institutions and investors either. Generative AI can personalize financial advice and products for individual customers.
That's interesting. So how does that work?
Well, imagine AI-powered systems that analyze your spending habits, investment goals, risk tolerance, and then recommend tailored financial products or strategies that align with your specific needs.
It's like having a personal financial advisor available 24/7. But this all raises a big question in my mind. All of this AI wizardry relies on data, lots and lots of data, and a lot of it is very personal.
Data privacy is a huge concern, and it's something we need to address head-on. There are various approaches being explored to mitigate these risks. For instance, techniques like differential privacy add noise to data, allowing for analysis while protecting individual privacy.
So it's like blurring out sensitive details in a photo while still allowing someone to see the overall picture.
That's a good way to put it. And of course, robust encryption protocols are crucial for securely storing and transmitting this data.
So it's not just about using the data, it's about using it responsibly and ethically.
Absolutely. And it's not just theoretical. We're seeing real-world examples of this in action.
Oh, I'd love to hear about some specifics. What companies are already using this tech?
Well, one prominent example we found in our research is JP Morgan Chase. They're using generative AI to analyze transaction patterns and flag suspicious activity in real time.
That makes sense. They have a massive volume of transactions to monitor. So how is the AI helping them?
It's reportedly helped them significantly reduce fraudulent transactions, and that's not just good for the company. It builds trust with customers, knowing their finances are more secure.
That's a great point. What about other companies?
Capital One is another great example. They're using generative AI to personalize credit card offers and promotions based on individual spending habits.
So instead of sending out generic mass mailings, they are targeting customers with offers they're more likely to be interested in.
Exactly. It's about making marketing more relevant and less intrusive. These examples demonstrate that generative AI isn't just a futuristic concept, it's already being implemented by major players in the financial industry.
It seems like this technology is rapidly moving from theory to practice, and it's making a tangible difference. We've been talking about how generative AI can improve existing financial processes, but what about its potential to completely disrupt the industry as we know it?
Now, that's where things get really interesting. One of the most intriguing aspects highlighted in generative AI in finance is the potential for decentralization.
So what does that mean in practical terms?
Well, imagine a world where financial transactions occur directly between parties, facilitated by AI-powered platforms, without the need for traditional intermediaries like banks.
That's a radical idea. So are we talking about a future where banks become obsolete?
It's more likely that banks will evolve, shifting their focus towards more specialized services, leveraging AI to enhance efficiency and cater to specific customer needs. Think AI-driven wealth management platforms, sophisticated risk assessment tools targeted at niche
It
markets.
sounds like banks would need to adapt and innovate to stay relevant in this new landscape.
Exactly. It's all about embracing the possibilities while navigating the challenges that come with them.
And what about the impact on jobs? This technology seems like it could automate a lot of tasks currently performed by humans.
That's a valid concern, and it's something many of the research articles we reviewed addressed. Generative AI has the capacity to analyze data from job recruitment platforms and websites, providing valuable insights into labor market dynamics and potentially even forecasting future workforce needs.
So it's not just about automating jobs. It's about understanding the larger picture of how the job market is changing. This is also fascinating. We've covered so much ground already, from automating mundane tasks to personalizing financial services and even the potential for decentralization.
And we're just getting started. There's so much more to explore. There's certainly a lot more to unpack. But with any powerful technology, it's crucial to consider the ethical and societal implications.
Absolutely. One area that always comes up in discussions about AI is bias. How does that play into generative AI in finance specifically?
It's a significant concern. Let's say a generative AI system is trained on data that reflects existing biases in the financial system.
Like, for instance, historical data on loan approvals that might contain biases against certain demographics.
Exactly. In that case, the AI system might perpetuate those biases, potentially leading to discriminatory loan decisions or unfair investment recommendations.
So it's not enough to simply create these AI systems. We need to make sure they're developed and deployed in a fair and ethical way.
Right. It all starts with the data. We need to ensure that the data sets used to train these AI systems are diverse and representative of the population as a whole, and we need to constantly monitor these systems for signs of bias.
So it's an ongoing process, not a one-time fix. Now let's shift gears a bit and talk about regulation. With all these advancements in AI, how are regulators around the world responding to this new technology?
Regulators are definitely trying to keep up with the rapid pace of innovation. In Europe, the General Data Protection Regulation, or GDPR, has set a precedent for data privacy and protection, emphasizing transparency and user consent.
So even though GDPR wasn't specifically designed for AI, it's still having a significant impact on how companies can use this technology.
Absolutely. And in the United States, we're seeing a patchwork of state-level regulations emerging, like California's Consumer Privacy Act, or CCPA, which gives consumers more control over their personal data.
It's interesting how different regions are approaching this challenge, each with its own unique legal and cultural context.
Meanwhile, in India, the Reserve Bank of India, or RBI, has issued guidelines specifically addressing the use of AI in banking, stressing responsible innovation and strong risk management.
So it seems like regulators globally recognize the need for clear guidelines, even if the specifics are still being worked out.
Definitely. And it's not just about government regulations. Industry groups are also developing best practices and ethical frameworks to guide the responsible development and use of generative AI.
It's encouraging to see this kind of collective effort to ensure that this powerful technology benefits both businesses and society as a whole.
It's a critical step. And we need to remember that this is an ongoing process. Regulations and ethical frameworks must evolve as the technology itself continues to advance.
It's like a constant dance between innovation and regulation, trying to stay in sync.
Speaking of collaborations, there's been a lot of talk about partnerships between traditional financial institutions and fintech startups specializing in AI. What's your take on this trend?
We're seeing this more and more. Many established financial institutions are realizing that they might not have the in-house expertise or agility to develop and deploy AI solutions on their own.
So they're turning to the experts, the fintechs, who are already at the forefront of AI innovation.
Precisely. These partnerships create a win-win situation. Fintechs get access to the vast customer bases and financial resources of established institutions.
And those institutions, in turn, benefit from the cutting-edge AI capabilities of the fintechs.
Right. It's a synergistic relationship where both parties bring something valuable to the table.
Now, taking a step back and considering everything we've discussed so far, what are some key takeaways our listeners should keep in mind as they navigate this rapidly evolving world of generative AI in finance? That's a great question. It's certainly a lot to process, but I think we can distill it down to some essential points.
Before we jump into those takeaways, are there any other crucial points from our research that we should touch on?
Absolutely. We've focused primarily on the technological and financial aspects, but we can't overlook the potential societal impacts of such a major shift in finance.
So what are some of those broader societal implications?
Well, generative AI in finance raises some thought-provoking questions about economic inequality. If the benefits of AI-driven finance are primarily reaped by a select few, it could exacerbate existing disparities.
That's a valid concern.
Yeah.
It's important to ensure that this technology doesn't widen the gap between the haves and the have-nots.
Exactly. However, there's also a flip side to that coin. The book also highlights the potential for increased financial inclusion.
How so?
Imagine sophisticated financial tools and services, powered by AI, becoming accessible to populations that have traditionally been underserved by the financial system.
That could be incredibly empowering, opening up new opportunities for individuals and communities that have been excluded in the past.
It's a complex picture with both potential benefits and risks.
It sounds like we're standing at a crossroads, with generative AI and finance presenting both exciting possibilities and potential pitfalls.
Precisely. Understanding these multifaceted implications is crucial for navigating this new landscape responsibly. But let's circle back to your earlier corner. I believe it's time we summarize our deep dive with those 10 key takeaways for our listeners.
Do it.
First and foremost, generative AI is not some distant futuristic concept. It's already reshaping finance, automating tasks, improving fraud detection, and revolutionizing investment strategies.
It's happening now.
Second, data privacy and security are non-negotiable. Protecting sensitive financial information is absolutely paramount in this AI-driven world.
We've talked about techniques like differential privacy and strong encryption, but vigilance is key.
Third, we have to address the issue of bias head-on. We must ensure that AI systems are developed and deployed fairly and without perpetuating existing societal biases.
So those meticulously curated data sets and continuous monitoring we discussed are essential.
Absolutely. Fourth, regulators worldwide are working to keep pace with this rapidly evolving technology, striving to establish clear guidelines and frameworks for responsible AI use.
We see different approaches emerging in different regions, but there's a global recognition of the need for regulation.
Fifth, we're seeing a surge in collaborations between traditional financial institutions and agile fintech startups.
It's a win-win situation, with each party leveraging the strengths of the other.
Sixth, the potential for decentralization in finance, fueled by AI, is a game changer. It raises fundamental questions about the future role of traditional intermediaries like banks.
It's fascinating to consider how the financial landscape might be transformed if this trend continues.
Seventh, the impact on the labor market is a significant concern. Some jobs are at risk of automation, while new opportunities will undoubtedly emerge.
It underscores the importance of adaptability and continuous learning in this evolving landscape.
Eighth, AI-driven algorithmic trading is incredibly efficient, but raises concerns about market volatility and the need for robust oversight.
Speed and efficiency are great, but not at the expense of stability and fairness.
Ninth, generative AI has the potential to streamline regulatory compliance processes, helping institutions navigate complex regulations more effectively.
That could save time, reduce costs, and improve accuracy, a win for everyone involved.
And finally, our 10th takeaway is the potential for AI to design entirely new financial instruments. This could reshape the way we invest and manage our finances in ways we can't even fully imagine yet.
It's mind-boggling to think about the possibility.
It certainly is, and that, I think, captures the essence of our deep dive into generative AI and finance.
It's been an incredible journey, exploring this multifaceted and rapidly evolving landscape.
And this is just the beginning. As this technology continues to advance, we can expect even more exciting developments and unforeseen challenges.
To our listeners, we encourage you to continue exploring this fascinating intersection of AI and finance.
Dive deeper into the resources we've discussed, stay curious, and most importantly, be prepared to adapt. This is a wave that's not going away, and we're all in this together. Until next time, this has been The Deep Dive, signing off.